Good morning, everyone, and welcome. My name's Abby Phillips from Jane Morgan Management, and I'd like to thank everyone for joining us in today's edition of the JMM Virtual Event Series. First, we'll hear from NH3 Clean Energy. As I mentioned, the ticker code is NH3. They're focused on developing their WAH2 project in WA with the goal of producing low emissions ammonia for export into rapidly growing Asia markets. As countries across Asia seek practical pathways to decarbonise power generation and heavy industry, ammonia is increasingly emerging as a commercial viable fuel and hydrogen carrier. The company's strategy centres on delivering commercially competitive low emissions ammonia while leveraging existing infrastructure, established technologies, and long-term customer demand to reduce development risk. Presenting for the company today is Chairman Charles Whitfield. Charles has extensive experience across energy markets, product development, and international commercialization. Charles, thank you so much for joining me. Over to you.
Thank you so much, Abby, and welcome everybody to the presentation. I think we have a mixture of existing and new investors online, so we will keep it fairly basic, but then please do dive in the Q&A session. After reading our disclaimer, basically, the outline of the company is that we identified about 4 or 5 years ago the increasing demand for clean ammonia as an energy source, especially in the Asia Pacific region. Asia Pacific is both the largest consumer of ammonia and also the highest growth market for ammonia. And there are a couple of specific energy transition thematics which are driving future demand. In terms of the project, as Abby mentioned, we're very focused on pragmatism in terms of the rollout and development of the project. So that has made all the choices for the project in terms of the technology usage, using established technology, in terms of site location, in terms of partnerships, in terms of the development and rollout of the project, and also in terms of the financing and delivery of the project. So just a few moments to talk about the dynamics driving demand at the moment. There are two main thematics. One is the use of clean ammonia by countries in Asia to displace fossil fuels in terms of their power generation. And the other one is the use of clean ammonia as an alternative clean bunkering fuel for decarbonising shipping. And we are in the ideal place for both of those markets. So first of all, looking at power gen, this is being led by the Japanese, but the rest of Asia is following suit. And essentially what's happening here is the fleet of coal-fired power stations, which is currently a critical part of power generation in the region, in order to decarbonize them, what the countries are doing is using ammonia as a co-firing agent in with the coal to have an immediate effect on CO2 emission reduction. The reason why they're looking to do this as opposed to just closing down their coal-fired fleet is one, their infrastructure is quite young. In Japan, for example, quite a lot of their coal-fired power stations were built post-Fukushima in the mid-2010s, so 2015, 2016. But also, and this has been underlined in the recent conflict in the Middle East, they want to be able to have security of supply regionally, and that essentially means coal as opposed to oil and gas, where they're dependent on intercontinental suppliers. So they want to maintain that flexibility of having coal as part of their mix, but at the same time, they have their emissions targets. And in order to square the circle on both of those, what they're doing is introducing ammonia as a initially 20% co-firing fuel in their power stations, going up to 50% over time. That's actually creating an enormous demand for clean ammonia, and this is being government sponsored. For example, in Japan, METI, which is the Ministry for Economic Transportation and Industry, is actually set up a CFD, a contract for difference scheme, to help to subsidize the transition to ammonia usage. The other area that I mentioned where ammonia is being used as a fuel is to displace existing marine fuels like heavy fuel oil and marine diesel in shipping. And this is being driven by a number of things. First of all, the focus on emissions undertakings by mining companies, for example, or other producing companies, but also the International Maritime Organization looking to introduce effectively a carbon tax coming in 2028 and becoming more and more stringent over time. What you're seeing in the market already is an order book for ammonia-fueled vessels, and that's what that graph on the right-hand side shows. And that's broken down by bulk carriers, by container ships and auto carriers, which are three of the most common vessels which are operating in the Asia-Pacific region. And from those orders and deliveries of ammonia-powered vessels, you can then determine what the ammonia demand is off the back of that to operate those vessels. One of the markets which we're very focused on, and we'll talk about a little bit, is obviously the bulk carrier market. The Iron Corridor route, which is the route from the Pilbara up to Asia carrying iron ore, is actually one of the busiest shipping routes in the world by tonnage. It alone actually is responsible for 5% of marine cargo. So it's a huge opportunity for decarbonisation and a huge opportunity for ammonia bunkering. In terms of NH3's product offering, like I say, we've always looked at pragmatism and commerciality. And so the focus is on what our customer needs are. They care about a number of different dimensions. One is obviously emissions intensity, and our emissions in terms of CO2 intensity is half what the definition of clean ammonia is. So we're well within the scope for being clean. Secondly, price. We have modeled all of our economics on the basis of $600 a ton, which puts us in the lowest quartile in terms of producers. And then in terms of security of supply, which obviously has become even more underlined given the conflict in the Middle East. We benefit in a number of ways on that basis. First of all, obviously being based in Australia as a stable geopolitical environment, but also our proximity to market, which means that we're not going through any of the major maritime pinch points like the Straits of Hormuz or the Panama Canal or Suez Canal or even the Straits of Malacca. We have a much more safe and stable route to market. That has another advantage in terms of proximity to our market, and that's from a perspective of shipping. Obviously, what our customers care about most is their delivered cost, and so we are even more competitive when you look at us on a delivered price. But the other aspect of that is that when you are looking at low emissions ammonia, you not only count the emissions associated with the production of that ammonia, but also the transportation to the point of consumption. And so we come in at about a third of the transport distance and cost and emissions profile from the US and about half that of the Middle East. So we have another distinct competitive advantage to offer our customers. Moving on to the bunkering that I mentioned and the importance of the Iron Corridor Pilbara route, what we have done is essentially rolled out a one-stop whole solution for our customers. So at the center of those concentric rings, you see NH3 Clean Energy as the producer of clean ammonia. We then have a joint development agreement with Oceania Marine Energy and the Pilbara Ports Authority, Oceania Marine Energy are the provider of the bunker vessel. So think of that as a refueling barge, which essentially loads ammonia at port and then goes out to the refueling anchorage to do a ship-to-ship transfer of ammonia. And then the Pilbara Ports Authority, who obviously are the provider of infrastructure and the regulatory environment for the refueling of ammonia-powered bunkering ships in the Pilbara. On top of that, we have MOUs in place with Mitsui O.S.K. Lines, MOL, who are one of the biggest bulk carrier operators on that route, and also Itochu Corporation, who not only operate ships on that route, but also are looking to NH3 to provide them with clean ammonia for their other Asian-wide bunkering operations. So looking at ammonia bunkering in Japan and also Singapore. The other thing to mention about the Itochu agreement is that beyond the supply agreement, it also contemplates them being a strategic partner in the project and contributing equity financing to the project. So what makes the project so compelling? Well, as I mentioned, we made a determination early on to be a blue ammonia producer, and that's essentially because that is the cost competitive and established technology at the moment. That means that we need gas supply. We are based in the Maitland Strategic Industrial Area, which is just south of the Burrup Peninsula, where obviously is one of the biggest onshoring points for Northwest Shelf gas. And we actually sit on the Dampier to Perth gas pipeline, that blue line that you see on this chart. We are based where that blue dot is in the Maitland Strategic Industrial Area. That has a number of key advantages, as well as being right next door to that gas pipeline. That is also an infrastructure corridor. So our ammonia pipeline goes back up to the port of Dampier, which already has ammonia handling facilities. As well as gas and port, we also have two nearby CO2 sequestration projects, one owned by Santos and the other one managed by Woodside. So we have all the pieces of the puzzle required. And then finally, obviously, Dampier is one of the two main ports for the Iron Corridor route. So we would load our bunkering vessel at Dampier. It can service the ships that come into Dampier, but also go to Port Hedland to provide a bunkering service there. The other component in terms of de-risking is to make sure that we have the right partners in the room for the project. The project benefits from government recognition, both at a state and federal level. So we have WA lead agency framework status and also federal major project status. So there are only 30 projects in the country which have federal MPS. That includes airports and roads and rail and all the rest of it. So it really is a very special distinction. And that assists us not only with our approvals process, but also in terms of our interfacing with government bodies, both funding bodies like NAIF, EFA, NRF, as well as international assistance in terms of our customer relationships. In terms of gas supply, we have a supply agreement with Chevron Gas and CO2 sequestration with Woodside, as mentioned, and water from the Water Corp. Our land is in the SIA and granted by Development WA. In terms of technology and engineering, we are using the preeminent ammonia technology and hydrogen technology, which is provided by Topsoe, and we have Linde as our engineering partner. Linde are currently undertaking the engineering work for FEED, and we have an agreement with them to proceed through construction and also looking at build, own, operate and maintenance contracts for the actual commissioning and operation of the plant. Again, focus throughout is on de-risking and simplification of the pathway to production. I've already mentioned the agreements in terms of joint development agreement that we have with Pilbara Ports and the MOUs with MOL and Itochu. So just to give you an idea of what an ammonia plant looks like, this schematic might be helpful. Essentially, the front end is essentially producing hydrogen. So you have a gas supply. You do what's called gas reformation, which splits the natural gas, which is CH4, into its carbon and hydrogen component. You then capture and compress the CO2, and that goes in a pipeline to the CO2 sequestration project. That gives you a stream of clean hydrogen that goes into your ammonia synthesis. The other component or ingredient for ammonia, as well as hydrogen, is nitrogen. You get that through an air separator unit. And that then goes, the product of ammonia then goes by pipeline to an at-port storage facility, and then is loaded to the bulk carriers, and gas transporters to be taken to Japan. The other thing that this graphic shows is the split in terms of what we are contemplating for the actual build out of the project. So I mentioned that we're working with Linde for a build, own, operate proposal. So those boxes in yellow would be built, owned, and operated by Linde. And then the bits in blue would be owned by NH3. However, the chain dotted blue line that you see going around those five boxes would be under an operation and maintenance agreement with Linde. So essentially using the preeminent industrial gas company in the world for the actual commissioning and operation of the plant, as well as overseeing the construction and build out. I think I've covered off most of this slide in terms of the agreement with Linde. So let's just quickly talk about the economics of the project. The stock has performed well over the last 24 and 12 months, but we still see significant value, which is residing and still to be captured. We do have coverage by Curran and Co. In terms of an equity report, which is worth looking at. But in terms of some of the headline figures, we're taking a phased approach to the project. So phase one of the project would produce 650,000 tons of clean ammonia. That has an NPV8 of $682 million based on a 60-40 debt equity split, and a 15.6% IRR. EBITDA on phase one is just shy of $300 million a year. The second sequence that we're looking to roll out, phase two, which doubles production to 1.3 million tons, if it's rolled out 5 years after phase one, has an NPV8 of 1.14 million. And if we accelerate it to a 2-year gap between phase one and phase two, that bumps the NPV8 up to $1.5 million and EBITDA just over 600 million a year. So the capex for the project is 1.7 million. So funding 1.7 billion. Sorry. So the funding need is 1.8 because of the deferred interest period during build. That sounds like a big number to an awful lot of people, but the thing about this project is it's a very straightforward infrastructure project. So we are a domestic gas company or customer. So we have fixed price gas and fixed price CO2 sequestration. So essentially fixed price inputs. We also are contracting long-term offtake price contracts. So fixed price plus CPI indexing in terms of our revenue stream. And then obviously we have a world-class operator in terms of the actual facility itself. So from a financing point of view, it's very, very conventional for infrastructure financiers. And so because of that, we can look at 70% debt, 10% mezzanine, and about 20% equity in terms of the mix. Obviously, any component of the project which is build, own, operate comes off that total. So those 4 boxes which I highlighted on the graphic of the project, that would be about half of the capex, which would be the responsibility of the build, own, operate partner. So where are the funding conversations at the moment? Essentially, we have some distinct pools of capital that we're working with. So first of all, obviously, because it's a clean energy project, domestically, we are applicable for NAIF, Northern Australian Infrastructure Facility, EFA, Export Finance Australia, and also NRF, National Reconstruction Fund financing. Also, because of the Japanese component with our customers and partners, we are also eligible for JBIC, the Japanese Bank for International Cooperation funding. So those are all subsidized and favorable funding sources. We're also, as I mentioned, talking to conventional infrastructure financiers who would look to be providers of both debt and equity into the project. And then finally, strategic equity partners as well, as mentioned. So we've had an accelerating list of milestones achieved over the last few years of development. And as we do the run up to final investment decision, which is slated for the end of the year, there are four main work streams that we are progressing. One is around commercial arrangements and converting those to binding subject to FID. There's obviously financing, which we are progressing alongside engineering with Lindy, and also obviously the approvals. Just to finish off, the team, both at a board level and at an executive level, has an extremely experienced team of people who have both commissioned and operated multi-billion-dollar plants and businesses in the past. And so looking forward to doing exactly the same thing here with NH3. Abby, if there are any questions, that I'd be delighted to answer them.
Thank you, Charles, and thanks for your presentation. We do have a few questions coming through here. So, firstly, we've heard a lot about hydrogen over the past few years, but ammonia now seems to be moving into the spotlight. From your perspective, and I know we touched on this during the presentation, but just for a deeper dive here, why is ammonia becoming such an important part of the global energy transition?
Essentially, it's a lot of it is to do with the physical characteristics of hydrogen versus ammonia. So hydrogen obviously is a very small atom. That means that it has very low energy density. It's also quite hard to store and transport. So while hydrogen still has a role for localized applications, for international energy needs, it's definitely ammonia. Ammonia has been transported across oceans for decades. Everybody knows how to do it. A lot of the infrastructure is there in place already. It's a lot easier to handle, and therefore it's become the predominant hydrogen carrier, as it's known.
And then one of the themes investors often focus on is execution risk. Your
Hmm.
strategy appears to emphasize using existing infrastructure and established technologies. How important is that moving a project in like WAH2 towards commercialization?
It's critical, really. I mean, whatever you're building in Australia, you're looking to minimize construction risk. So, in terms of the actual build out, we are looking at modularization, which is exactly the way that the Perdaman urea project has been built on the Burrup Peninsula. We're actually using a lot of the same engineering providers. So, essentially, you have large prefabricated modules, which are constructed offshore and then brought to site and essentially assembled on site. So you're minimizing the amount of risk around cost overruns and so on and so forth. Obviously, again, using experienced partners who have built plants of this sort multiple times before, also, provides a diminution of risk.
And Japan and other Asian nations continue to announce policies supporting low emissions fuels. How do those policy settings translate into commercial opportunities for NH3 over the coming years?
Yeah, well, it's a good question and particularly pertinent. I'm actually in Canberra at the moment and celebrating the 50 years of Australian and Japanese partnership following the NERA agreement. And so there have been an awful lot of ministerial meetings and forums that we've taken part in. And essentially, obviously Australia has been a key energy partner for Japan over the last 50 years. And essentially, we're looking to the next 50 years, and ammonia and clean energy solutions are a critical part of that discussion. So the Japanese have, as I mentioned, a number of different policies. There's the CFD scheme, the Contract for Difference scheme, and also the long-term auction scheme, which are basically government subsidies of using ammonia in terms of transition for hard to abate sectors and the power generation. And you're seeing similar types of incentives in other Asian countries.
And now the WAH2 project has been described as a phased development. Can you explain why that staged approach is attractive for both the financing and shareholder value perspective?
Yeah, well, I mean, this isn't my first rodeo. I've done a lot of business development in new industries, not least, I did the turnaround of Galaxy Resources in the lithium space, 15 years ago or more. And what you see in these nascent markets is if you have lumpy amounts of new supply, which are mismatched with demand, then you get price volatility. And so it's much more sensible to do a phased approach where essentially you pre-sell all of your new supply prior to building it. So you're doing long-term offtake contracts prior to FID, which basically takes away both price risk and also acceptance into the market.
And then there's also a question here about liquefying CO2 to sell into the CO2 market. If you could perhaps explain to us just whether that's ever an option or why that may or may not be possible, perhaps without getting too technical.
Yeah, I mean, there is a market for CO2, for things like even the food industry, for example, where it's actually used as a preservative in meat packing and so on and so forth. It's not something which is part of our business plan. We don't have any assumptions about selling CO2. We, like I say, assume that we're sequestering the CO2. I guess. First of all, our remoteness. So, you'd need to ship the CO2 somewhere else to use it commercially. But also, the demand in Australia is relatively limited. So, yeah, it's not part of our business assumption.
And then last question from me here is looking ahead over the next 12 to 18 months, what are the major milestones investors should be looking out for over the next time frame?
Yeah, well, we've got a lot going on. As I mentioned, there's four work streams of, approvals, commercial, financing, and engineering. So we'll have news flow off the back of all four of those. It's sort of a sprint to the finish line now in terms of FID. So there's a real intensity around those work streams. So yes, there'll be a lot of news as all of those things come to fruition. Obviously, we're also looking on the investor side to make sure that more people are aware of this. I mean, again, going back to the lithium days, nobody knew what it was, nobody knew what it was for, and nobody cared, and then everybody cared. And I kind of feel like we're in the same position with ammonia, where it's kind of off everybody's radar at the moment. But what you're seeing is, and the announcement by Fortescue just last week of 12 new ammonia fueled vessels, being ordered is a clear example of just how real this is. But a lot of people are still blissfully unaware of it.
Thank you so much for your time today, Charles. That is all we have time for, but it's been fascinating to hear more about the role ammonia could play in helping Asia decarbonise while strengthening, Australia's position as a future energy explorer. But thank you again so much for your time, and we'll hear from you again soon.
Great. Thanks, Abby, and thanks everyone for joining.
Thanks, Charles.